Hey everyone, Cathie Investor back to another video for you today. So I want to talk about Teladoc again because I feel right now with the stock down 75%, a lot of people don't really know how the business is actually performing because the business is performing very good. Yes, the stock is down a lot. The whole healthcare telehealth market is down. We're going to talk about that as well. But Teladoc's business has been performing very well, not just this year, not just last year, but throughout the years. Obviously, it has changed a bit with the acquisition of Livongo, which we're going to discuss as well. But it's very important to note that just because the stock is down a lot does not mean that the business is struggling. I'm going to show you why in this video. Also, if you're interested, it's still Ark's number 2 position across the board. So they have a high conviction on that company. I believe they own around 10-11% or so. So pretty big deal for them. Now, I know just because Ark and Cathie owns it does not automatically mean that it's a good investment. Just wanted to put that out there because I know a lot of you, and myself included, are interested in Ark Invest and in Cathie Wood. So there you have it, still second biggest position for them. Now there are a couple of reasons why the stock is down a lot. Like I said, the whole telehealth healthcare market stock companies have gone down for the last year or so. But if you actually look at the current businesses, Teladoc is actually crushing it. In the past video, talked about Teladoc, talked about Amwell, compared both a little bit, and you can clearly see that Teladoc is crushing it. Amwell is a bit struggling, but let's take a couple of reasons here. First of all, valuation reset for most growth stocks. So that's one of the reasons. Second of all, it's just a COVID play label on most of those work from home healthcare stock that gained a lot of popularity throughout the pandemic. So you have that label. Now that we're going or trying to go out of this pandemic, obviously people are skeptical. And then third is obviously the Livongo acquisition, high SBCs, struggles with management, etc. So that takes a little part as well. But the stock right now is actually cheaper than what it was before COVID. I believe right now price to sales ratio is around 6 times sales. Before COVID, that was more, and the business today is better than it was before. So there is that. And currently at the time of making this video, it has a market cap of around $12 billion. Now ask yourself this, do you think that 5-10 years from now, it will be worth more or less than $12 billion? I'd like to know the answer, leave it down in the comments below. Now as for management, they've guided for 25 to 30% compounded annual growth through 2024. So they're not going to give back the growth they gained from this COVID situation, but they plan on building upon that 25 to 30% for the next 3 years. I think it's pretty good. Also for this year, if you look, they're currently guiding for 30%. So it's a bit more on the higher point, which is great. And as I said, obviously the telehealth and the healthcare market has been pushed forward in this whole pandemic situation. It's ripe for disruption, ripe for innovation, but it's nowhere near where the potential of this industry can be. There's still a lot of things to do, still a lot of ways to help the industry to innovate that industry. And here are a couple of numbers. Fortune Business Insights project that the telehealth industry will be worth more than $636 billion in 2028. It's rising at a compounded annual growth rate of 32.1%. Now let's hypothetically say that Teladoc takes 10% of that, $63 billion, not too bad, especially if you look at the current situation of company, the stock, etc. I think I'd sign the papers right now if you tell me that for the next 7 years, guaranteed 30% growth. I think it's a very good investment. And if you look at this chart, does this look like a struggling business? See adjusted EBITDA back in 2018 to 2019, almost tripled. Then 2019 to 2020, 4 times. Obviously it was a pandemic, so growth got accelerated, but still 2020 to 2021, that's projected numbers, it doubled. If you look at the stock, it's at the same price it was back in 2020 before COVID. So the numbers don't lie. The business isn't struggling, it's actually doing very well. We're going to talk a bit more about the numbers in just a bit, but first, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Alright, touching back on what I said before, the business is not struggling at all. The stock is, the business not at all. Just look at those numbers right here. Look at the graph here on the right. You can see very clearly this is the amount of membership. So back in 2018, there are 32.2 million members. Access fee revenue per member was $1.06. Now, obviously the memberships have grown a lot, but the earnings per member, not that much, 20% or so, but it more than doubled its total membership. Now, if you go for 2020 and then the estimated 2021, hasn't grown that much at all, just 2 million, but the earnings per member have basically doubled. Now, if you tell me that, let's say they stay at the same membership rate, let's say it keeps on growing 2 million, 2 million, 2 million, but the earnings per member suddenly continues to double, obviously the business itself, the amount of money that they're generating will grow as well, and it's just becoming a great cash flowing business. And I'll add to that, there's probably more growth likely to come from Primary 360 this year and in the years to come. So don't expect the business to slow down. I expect earnings to actually accelerate from here. You can maybe take the example of how the situation of Tesla was back in 2019. If you looked at the business really in detail, you saw that the business is starting to perform very well. And it's just a matter of time until the snowball starts rolling and become bigger and bigger. I believe the same will happen with Teladoc in 2022. You'll start to see that snowball rolling and become bigger and bigger. And with regards to the health of the business, they have $826 million in cash equivalents, and short-term investment. Operating cash flow of more than 100 million. I believe the free cash flow is also above 100 million for the last 2 quarters or so. So let's say if they wanted to acquire another company, they have the money to do so, and they are generating money as well from the business. So if they really wanted, let's take hypothetically, let's say Amwell. Amwell is worth around $1.1 billion. If they wanted to acquire Amwell, wouldn't really be a struggle. They have the money, maybe some stock as well, and that's it. You just bought yourself a competitor. Again, this is hypothetically. If they wanted to do something else, they have the money for that. And since the business is generating cash as well, no real struggles there. Now, before I end this video, I just want to show you a couple of things from their JP Morgan Healthcare Conference presentation and talk a bit more about the SBC and the net loss. So first up, this is for the people that keep on saying that Teladoc is just Zoom for doctors. Maybe it started that way, telehealth, that's it. But everything you see here is what Teladoc is offering. They basically want to become the go-to place for your healthcare needs. So it started very small. You can see here, bottom left, expanded to all of this outside of the United States as well. And then 2021 and beyond, whole person care, which is a new category that they basically, let's say, invented. But all of this is what Teladoc offers. It's probably going to offer much more in the future, but calling this just Zoom for doctors is just completely wrong. And another great visualization here from the graph. You can see here on the left how well their business is performing. More than 40% of telehealth members have access to multiple products compared to less than 10% back in 2017. This is also why they're generating more money each and every year. And as they will offer more and more product, I expect this to become more diversified, and this will obviously generate more cash for the company. And ultimately, it helps the patients as well. Don't forget that this is the primary reason why Teladoc exists. And as for the growth outlook, like we said before, the target for 2021-2024 revenue compounded annual growth rate between 25 and 30%. And like I said, this approximately $2.6 billion for the full year 2020 is a 30% growth of what they expect for 2021. And then for fiscal year 2024, they'll be at more than $4 billion in revenue. All right. And last thing is obviously the net loss. If you look at the net loss, the numbers here, 2018, 2019, 2020, you suddenly see a huge jump here. You're like, what is this? Why is this so high? Doesn't make sense. then obviously if you just look at that, you look at the stock, you might see the correlation. Okay, the business is losing suddenly a lot more money, then yes, the stock should go down. But if you just look a bit underneath, you see here stock-based compensation, and this is the main reason why it's so high. We went from 66.7 million to 475 million. Big difference. If you remove, let's say, if you go back to normal, so you remove 400,000, you're at 85.1 here, which is lower than 2019, which will make everything look much better, right? And as we've said before, if you look at the adjusted EBITDA, you see that it has been going up and up and up in the last couple of years, not just a little bit, basically tripled, then quadrupled, and then like we've seen, it's doubled again. So as you can see, Teladoc's business is doing very, very well. I expect the coming quarter to be another good one. You'll see that the business is performing well. This is not just a COVID play. This is a play on healthcare and telehealth, the evolution, the disruption of this whole industry. I think this is going to be an amazing investment. Again, this is just my personal opinion. You can think otherwise, but do let me know down in the comments below what you think about Teladoc. I strongly believe that right now we're in this Tesla 2019 situation, and suddenly when the switch gets turned on, you'll see how well this business is performing, and then the market will realize this as well, and you just see the stock soaring. Again, this is just me. Let me know what you think down in the comments below, and that will be it for this video. If you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always guys, take care, stay safe, and see you all in the next video. Bye bye.